Welcome to The Explainer. Today, we're unpacking something that's literally restructuring the entire fabric of how we manage money. We're talking about a total ground-up transformation, going all the way from the budgeting app in your pocket right up to the highest echelons of Wall Street. Yep, it's the revolution of artificial intelligence in finance. Okay, let's dive into this. Let's kick things off with a pretty mind-blowing number, 600%. A recent study out of the Stanford Graduate School of Business actually pitted a completely autonomous AI analyst against real human mutual fund managers, looking at 3 decades of historical data. And get this, the AI, using the exact same public data everyone else had access to, completely outperformed 93% of the human fund managers, by 600%. This isn't some far-off theoretical projection, folks. This is the reality of the tech we're dealing with right now. Now, what's really interesting about this is the critical distinction we have to make right out of the gate. Look, we're all pretty familiar with generative AI by now, right? You type in a prompt, you get some text or a cool image back. But the thing that's totally upending the financial world is agentic AI. These are intelligent systems capable of independent, complex decision-making. We're talking about an AI that doesn't just draft an email telling you your internet bill went up. It actually goes out, negotiates that bill down, or completely cancels a redundant subscription without you lifting a single finger. It literally takes autonomous action. Section 1. The end of spreadsheets. Everyday finance. So this tech is stepping right in to solve those everyday, incredibly frustrating pain points of manual personal finance. For years, we've basically been stuck in this totally reactive era. You know the drill. You sit down on a Sunday, crack open a spreadsheet, and painstakingly categorize what you already spent last week. You're constantly managing yesterday's money. Well, AI shifts us entirely into the realm of predictive intelligence. These systems dynamically analyze your baseline habits, your seasonal trends, and upcoming bills to actually forecast tomorrow's cash flow. It's looking ahead to stop financial mistakes before they even happen. It's a real game changer. Take the Martinez family, for example. They plugged their accounts into an AI finance tracker, and almost instantly, the system autonomously sniffed out $347 in hidden monthly subscription overlaps. We're talking about redundant services they were accidentally paying for twice, or just things they'd completely forgotten about. The AI spotted it in seconds, something their manual tracking had totally missed for months. Or check out this story. An AI tool analyzed a tech worker's spending patterns and zeroed in on an emotional spending trigger. It turns out their quote-unquote occasional food delivery habit was actually happening like 5 times a week, and it was quietly draining $1,240 every single month. And the crazy part? The AI didn't just do the math. It highlighted the massive 5-year opportunity cost of that specific habit. So yeah, it turns out the AI kind of judges your late-night pizza cravings, but in a way that actually saves you some serious cash. Section 2. Welcome to Invisible Banking, Ambient Finance. As AI takes over all these tedious little tasks, our banking apps are going to start to literally disappear into the background. To make this abstract idea a bit more concrete, let's walk through a hypothetical but honestly highly probable day in 2030. In the morning, you get a salary bump and your AI silently adjusts your retirement contributions before you even wake up. Then in the afternoon, your connected car's dashboard pings to let you know it just negotiated a lower insurance rate because you've been driving safely. By the evening, your smart TV suggests canceling a streaming service you haven't watched in a month. Finance becomes everywhere, but completely invisible. In fact, analysts are projecting that by 2030, a staggering 60% of our daily savings, spending, and insuring actions will be handled silently by AI behind the scenes. We won't be constantly logging into bank accounts to do digital chores anymore. The heavy lifting is going to be completely automated. And this brilliantly illustrates a brand new banking paradigm known as the segment of one. Instead of just lumping you into some broad, generic demographic bucket based on your age or your zip code, AI allows banks to treat you as a highly unique individual. It literally tailors dynamic financial parameters exactly to your specific lifestyle, right in real time. And the benefits of this real-time monitoring are incredibly tangible, especially when it comes to security. Look at this real-world anecdote from our sources. At 2:47 a.m., an AI flagged a $67 charge at a gas station 200 miles away from the user's house. Within just 90 seconds, a push notification went out, the user confirmed it was fraud, and bam, the card was frozen, stopping a second, way larger charge dead in its tracks. That is proactive, immediate value right there. Section 3. The CFO's Digital Twin, Corporate AI. Okay, so now we're scaling things up. We're moving from personal bank accounts to the mid-market corporate world, where chief financial officers are aggressively adopting these AI digital twins. Between 2023 and 2025, the percentage of mid-sized company CFOs planning to increase their AI investments skyrocketed from 58% to 82%. This isn't just playful experimentation anymore. Corporations are doubling down because the realized returns and the massive efficiency gains are finally matching those lofty initial expectations. These corporate finance teams are really finding value across three specific buckets. First up, automation and reconciliation. This is effectively eliminating the dreaded month-end close, that tedious process of tallying up and balancing all the company's books, by detecting anomalies in real time. Second is intelligent recommendations, where the AI actively suggests fixes for accounting errors. And third, proactive scenario modeling. This is basically using AI as a digital coach to simulate massive supply chain shifts on the fly, right in the middle of a board meeting. The shift happening in corporate finance right now is perfectly summed up by this insight. Agentic AI is shifting financial operations from process-driven workflows to outcome-driven automation. Think about that. The AI isn't just a passive dashboard flagging a discrepancy for some human accountant to go and fix anymore. It's proactively recommending and executing the exact solutions needed to achieve the right outcome. Section 4. Wall Street's quiet AI invasion, the AI disruption. Let's move to and see how this builds into the absolute highest stakes arena in finance. The efficiency we're seeing here is just staggering. AI platforms currently rolling out to tens of thousands of employees at global investment banks like Goldman Sachs and Morgan Stanley are literally capable of doing 3 days of junior analyst work in 30 seconds, building pitch decks, pulling insights from dense proprietary reports, running complex models. Stuff that used to take a human team a grueling caffeine-fueled weekend now happens in moments. It's wild. So the crucial point is the undeniable human impact of all this. Among elite MBA graduates who didn't have job offers, Harvard jumped from 4% in 2021 to 15% in 2024. MIT saw a nearly identical leap. Incoming Wall Street cohorts are shrinking because those entry-level data crunching, spreadsheet formatting roles are simply evaporating as AI absorbs all that heavy lifting. Section 5. The augmented financial human, man plus machine. In a landscape that's increasingly dominated by algorithms, we really have to figure out where the human actually fits in, right? The key takeaway from all the data is that this is an evolution, not a complete elimination. Sure, routine data entry, low-level formatting, and basic analytical roles, those are disappearing. But as a result, high-level human judgment, empathy, nuanced strategic thinking, and complex relationship building are becoming exponentially more valuable. The human isn't being removed, the human's role is being elevated. We're stepping into this really crucial man-plus-machine balance. Think of it like this. AI serves as your tireless, lightning-fast analytical co-pilot, but you, the human, absolutely retain the final decision-making power. Financial literacy doesn't just go away, it remains essential so you can actually guide the AI. Whether you're managing your personal savings or running a massive corporate treasury, having a human in the loop is strictly non-negotiable. At the end of the day, you are still the CEO of your financial life. Which leaves us with this final, honestly pretty provocative thought to ponder. As we rapidly approach a reality where AI can undoubtedly manage the mechanics of your money better, faster, and way more efficiently than you ever could, what will you do with your newfound financial freedom? It's a seriously fascinating future ahead of us. Thank you so much for joining me for this explainer, and I'll catch you next time.